Mastering portfolio weighting. Tailored strategies for every investor stage. Portfolio weighting stands as a critical aspect of investment strategy, determining the allocation of assets within a portfolio. Whether you are new to investing, an experienced strategist aiming for early retirement, or nearing retirement age, understanding how to weight your portfolio is essential. In this article, we explore the basics of portfolio weighting and how it differs across various investor profiles. 1. Basics of portfolio weighting. Portfolio weighting involves deciding how much of your investment capital to allocate to different asset classes, such as stocks, bonds, real estate, and cash equivalents. The goal is to achieve a balanced and diversified portfolio that aligns with your financial objectives. To what extent or goal amount are you looking to earn or grow your investment? Risk tolerance. How much risk are you willing to take for particular financial gains, i.e., to what extent are you willing to lose some of your principal investment for the chance of obtaining larger returns? Time horizon. How quickly or within what time frame do you need to reach your financial objective? 2. Different strategies for each investor profile. A. New investors. Strategy. Focus on diversification and growth. New investors should prioritize diversification and growth potential in their portfolio weighting strategy. Allocate a larger portion of your portfolio to equities, stocks, for potential long-term growth while also incorporating bonds and other assets to manage risk. B. Experienced investors. Strategy. Fine-tune asset allocation. Experienced investors have the opportunity to fine-tune their asset allocation based on market conditions and personal preferences. Consider factors such as sector exposure, geographic diversification, and current market valuations when weighting your portfolio. C. Investors aiming for early retirement. Strategy. Balance growth and income. Investors aiming for early retirement should balance growth-oriented assets with income-generating investments. Allocate a significant portion to equities for growth potential while also including fixed income securities and dividend-paying stocks for stable income streams. D. Investors nearing retirement. Strategy. Prioritize capital preservation. Investors nearing retirement should prioritize capital preservation and income generation in their portfolio weighting. Shift towards a more conservative allocation, with a higher proportion allocated to bonds and cash equivalents to protect against market volatility. 3. Considerations for each investor profile. A. Risk tolerance. New investors may have a higher risk tolerance and can allocate more to equities. Investors nearing retirement typically have a lower risk tolerance and should prioritize capital preservation. B. Time horizon. Longer time horizons allow for more aggressive asset allocation strategies. Investors nearing retirement should focus on preserving capital and generating income with a shorter time horizon. C. Financial goals. Each investor's financial goals, such as wealth accumulation, income generation, or capital preservation, will influence portfolio weighting decisions. Conclusion. Portfolio weighting is a dynamic process that evolves based on individual investor profiles, financial goals, risk tolerance, and time horizons. Whether you are new to investing, an experienced strategist aiming for early retirement, or nearing retirement age, understanding how to weight your portfolio is crucial for achieving long-term financial success. By tailoring your asset allocation strategy to your investor profile and considering factors such as risk tolerance, time horizon, and financial goals, you can build a well-balanced and diversified portfolio that aligns with your objectives. Seeking professional guidance and periodically reviewing and adjusting your portfolio weighting strategy is recommended to ensure it remains aligned with your changing financial needs and market conditions.